this Genius Act is going to get delivered. It's going to get shipped. You're going to have stable coins. There's going to be a bunch of T-bills stuffed into these stable coins. Someone is going to buy these stable coins and own them on their crypto wallets. That's going to be where your T-bill supply gets absorbed. And then ultimately, why do these stable coins matter? Well, if you look at actual Bitcoin market prices, right, and you go on to, the summaries of all the, global exchanges, you got Coinbase representing the US's franchise, you got Binance representing China, got OKX representing the UK, and et cetera, right? You look at all the Bitcoin to dollar trading pairs. Really, the only one where you've actually got that Bitcoin to dollar price that we're all quoting, like 120K. Like we talked about this last week, Cameron. So the breakout on Bitcoin, that's been covered. So we won't get too much into Bitcoin price, but what is the actual dollar that spot market is quoted against? They're not all created, they're not all the same thing, right? Most of your spot exchange activity, Bitcoin to dollars, is actually market to market. Like the trading pair is Tether,
Right.
the counter side.
Right.
The only large exchange, there might be one more, but it's really Coinbase to USD. Like when I say USD, a Fed member bank, FDI insured dollar deposit, right? As you're trading pair to Bitcoin. So it's going to happen here. If you just ramp up stablecoin supply because it's somewhere where you can force feed a bunch of new T-bill issuance, and then the hope is, um, Latin America, Africa, other developing countries will just kind of absorb kind of dollar US led and operated dollar monetary policy, like through this new, I guess, crypto distribution, right, on these open rails. That's the idea, or the idea is like that's what's going to be this kind of next decade or generation ahead of essentially monetary policy, right? It's your new toolkit, your new framework, which is also kind of if you're going into the Fed's framework, you've got to think about how you're going to update your franchise to live in this kind of brave new world. Now, what's the actual like impact? Like just thinking 2, 3 steps ahead. What happens when we increase supply of stable coins, right? And you're going to see a bunch of USDC, bunch of, I mean, Tether will kind of reformat itself to comply with Genius Act, or have two competing
A
tether
separate.
products, right?
Yeah.
One Genius compliant, one offshore kind of managed tether classic. And you're just going to see a proliferation of stable coins. Where is that liquidity ultimately going to show up? It's going to show up where it's exactly where it's been showing up, for the last 10 years since Tether has been, as Tether has been materializing, as crypto exchanges have been materializing. It's going to all flow into that Bitcoin to Tether or Bitcoin to stablecoin exchange rates, right? Which ultimately the net of all this, assuming all of this happens, if A is true and B is true, then you lead to this conclusion, C is true, and that C is that dollar liquidity is ultimately going to show up, lifting the offer on the Bitcoin to stablecoin trading pairs, which are the majority of Bitcoin liquidity. So it's going to drive up a higher Bitcoin price.